All right, so thank you everybody for joining me today. It's now January the 10th. It's a Tuesday and it's a very nice day outside. This is going to be a great video where we're going to go over a few charts on completely different websites that you may not have seen before through Into the Cryptoverse. I subscribe to their website and I pay $120 a month for these charts that you don't really need. It's more so for interpretation and data, but I subscribe to it just so I can give you guys some really good good data. Okay, so let's get into it. First of all, let's talk about Bitcoin right now. We're going to do a quick review on what has been happening with Bitcoin, just so we're all caught up on the same page. Now, if you take a look at Bitcoin, there's a channel that's occurring right now. And in this channel, we see that there's a possible hit at around $18,000, right? No doubt about it, hard to argue. And then we say to ourselves, could there be other reasons why it could be a major resistance right here? And then, coincidentally, we pull up the 55 EMA and we say to ourselves, holy crap, the 55 EMA, first time it poked out, barely, was around 45 to 48,000. And then the next time was during the bull market, when it was above $54,000. And now, it's actually about to hit this channel right here again. So we have to take that into consideration and be extremely curious about this point. Then we say to ourselves, could it be possible that there's a third reason that could make it extremely prominent, this position? And then we take a look now at the chandelier exit indicator. And what the chandelier exit indicator is it measures, it's based off of the ATR, the average true range. And what hold on, let me just turn down my air conditioner. And what the ATR does is it measures the volatility. And this takes a multiplier of that volatility and kind of gives you a trailing stop based off of it. So if you take a look at the red line, it can act as a resistance to the volatility based off of a multiplier. You're welcome to go learn more about it. It's called ATR. And then the last time we were above it was around here, was around that same region as the 55 EMA. And then the last time, again, was pretty much right around here when the 55 EMA broke. And that's not a coincidence, guys. And if you take a look now, not only is the 55 EMA acting as the resistance, but also the chandelier exit indicator on the 2-day chart. You always want to look for the best chart that's going to create the best resistance on the time frame. Every time frame will be different. If I looked, for example, on a 12-hour time frame, you'll see that the EMA, it goes up and down too much. It goes above it, it goes below it. It goes above it, it goes below it. Just like the chandelier exit. If I go to a 4-day, it's way too below it. So you want to find one that fits the data. And now we see that this point right here is the exact place that the 55 EMA, the chandelier exit indicator, and also the channel resistance is hitting it. So you got to ask yourself at this point, is it really likely that we are going to break out of it? Like, really ask that question. I don't think it is, because when you factor in the macroeconomic conditions of the world, now I'm no economist. I just follow the news and based off of what's going on. I know that there's massive inflation rate hikes right now in the States, which is affecting the world. And when there's an inflation rate hike, nobody can afford to buy anything because, well, things are more expensive. Loans are super expensive as well. You cannot buy a house in Turkey if you're mortgaging it. Rentals are going up tremendously as well. China's having one of their biggest housing crises ever because the amount of debt that they can get from a bank or loans, it's being limited, first of all. And it just changed recently. So there's tons of these unconstructed houses that are just sitting there right now. So China's in hot waters. There's also the energy crisis in Europe where, well, because of the Russian-Ukraine war, Europe is really tapped right now for energy. If you were to buy a house in Turkey, just as an example, if you bought a 3 million lira house, which is like 150,000 American dollars, 3 million lira house over 10 years, you pay back right now about 8 million lira, which is 2.66 times more. You're paying almost 3 times more for your house in 10 years, which turns out to be a mortgage payment of about 67,000 lira a month. So you're buying a $150,000 home and then your monthly payment is about $3,500 a month. Does that freaking make sense? Like, nobody in Turkey can afford that because that's like literally what they make. Like 67,000 lira is pretty much what people make in a year in Turkey. Like, that's a lot of money. Like, that's an extreme amount of money. Like, that's literally what people make. So nobody can afford that in Turkey. And it's like that everywhere. So when you factor in all these macroeconomic conditions, it's and also regulation as well, right? Because of FTX and Celsius and Three Arrows Capital and all these companies that have went under because of mismanagement, we're weeding out these crappy companies, and there's going to be bound for regulation soon. There needs to be. People need to be protected. Institutions need to be protected. It's still the wild, wild west after 12 years. So I would expect after all of these bad things that have happened in the crypto space that the government's finally going to step up and start regulating something like a stablecoin. And like Kevin O'Leary said, even though he's not that respected right now, he got roasted by CZ there. He did say that once stablecoin gets regulated, it's highly possible for billions of dollars to pour in overnight from institutions. And that's where the market could really grow. But we're not there quite yet. So I'm going to show you guys some tables that are incredibly interesting. And this one here is called the monthly returns table. And we're going to break down the crypto market by month and whether it was up or down. So the bull markets that we had were in 2013, 2017, and also 2021. These were the bull market years. In 2013, we noticed that there were 8 green months and only 4 red months. So it was super bullish. Even some months doing 57, 56, 46, 55, 453%. And then in 2017, we only had 2 months of bearishness. Notice that? And then we had 10 months of pure bullishness. It was one of the most bullish years that we've ever had. And then in 2021, it was odd. And the reason why it was odd, where we had 3 months green, 3 months red, bullish, bullish, bearish, bullish, bearish, bearish, and they were split 6 months green, 6 months red, is because we had a double top. And that double top ended up causing these splits in the months where we went up in 2021 to April, dropped 50%, and then we went back up. But nevertheless, the entire year was fairly bullish with that split in April, May, and June. May was a horrible month. Now, if you take a look at the really bad months, you can see the heat map where June is a bad month. Okay, the worst months are September. September is historically always bearish. Okay, but now that we know that the bullish months in the bull markets, the majority of months are green. What matters next is what happens the year after the bull markets. So now we have to take a look at the year after, which is 2014. That was the bear market. 2018, the next bear market, and then 2022, the next bear market. So if you're noticing something, you should notice that my camera, first of all, let me just fix my camera. You'll notice that the bull market comes in every 4 years as a cycle, right? So we're seeing in 2013, 2017, 2021, and then the bear market years are 2013, 2018, 2022. So far for the past literally like 8 years, we're just going in a cycle every 4 years. And now if you'll notice in 2014, we'll have so many bearish months. In fact, we only have 4 green months. 1, 2, 3, 4 green months, and the rest of 2014 is a slaughter. And then 2018 was the same thing, except it was only 3 green months instead of 4 like in 2014. And then we had literally 9 bearish months in 2018. And then you look at 2022, which is just like 2024 actually, because we've had only 4 green months and 8 months of red. So if you survive till 2022, you should be very proud of yourselves, because 2022 was a hard year. In fact, if you've been here since, say, 2017, you should be proud of yourself for living through 2 bull markets and 2 bear markets. Not a lot of people made money in 2022. Only the top tier people, say day trading, made money. And the people that, say, tried to day trade the bear market for their first year, I'm sorry to say, but they probably got slaughtered. Because in a bear market, it's not the first year you want to learn how to day trade. So then what happens after that bearish year, that's also what matters the most. So if you take a look at the year after the bear market, which is now 2015 and 2019, we take a look at the recovery year and we say to ourselves, okay, was it likely that a bull market was going to begin? So 2015, this is what we see. We see 6 red months, actually 1, 2, 3, 4, 5 red months and 7 green months. So we're increasing in terms of how many months green that we have versus red after the bear market year. And then in 2019, it's the same. We're seeing 1, 2, 3, 4, 5, 6 months that are green and 6 months that are red. So now the 2015 and the 2019 is equivalent to the year that we're in right now, the phase, right? So, but if you look historically, in 2019 and 2015, they were bearish months, which means there's a possibility that January is also going to be bearish, and just based off of history. So, excuse me, if 2015 and 2019 were both bearish months because it was the year, or bearish years because it was the year for recovery, there's a high possibility that 2023 will repeat the same thing when you factor in the world economic conditions as well. It's not likely that Bitcoin's going to completely deviate away from traditional markets and just start this huge mega bull run when the biggest companies in the world are just crashing and 1/3 of the world is in a recession right now. It's just not likely for Bitcoin to do a massive bull rally. So, and then when you factor in those 3 conditions that I showed earlier, the channel resistance, the chandelier exit indicator, and also the 55 EMA, it's difficult to say that it's going to smash and break through 18.2K. Because if we hit it this year, and based off of everything I said, including the history of 2015 and 2019's bearish month, there's a strong chance that we're going to be bearish as well when we hit that resistance. Let me just have some water, folks. I have a bronchitis. So I hope this makes a lot of sense when we gauge it based off how the months have been going so far. So the next thing that I'm going to show you guys is, which one should we do? You guys want to do ROI or you want to do drawdown? Okay, I'm going to show you drawdown first. Okay, so what the drawdown refers to is how much it has dropped from the all-time high when it reached it. So for example, if the all-time high was $50,000 and it dropped to $25,000, the drawdown is 50%, right? So what you're going to notice interestingly about this is that every time we reached an all-time high, it would be in November or December, every single time, okay? So in 2013, we reached the all-time high in November. And then in the all-time high for 2017, we reached it on December, okay? And then as well in 2021, the all-time high that we reached was in November. Hold on. Oh! I gotta short this. I'm sorry, guys. I'm just gonna short like 50 grand at about 0. It's dropping. It's going. Had to get in the position. I've been waiting for this. It's gonna run probably. Okay, so finally Gala has dropped. I'm sorry, guys. Sometimes I got a live trade in the middle of a coin. So it finally broke out this pattern. I'm pretty confident that this pattern has now broken. That's been forming for a while. So this is the beauty of alerts, right? Gala has been kind of on a bearish run now because we reached the all-time high. Or not the all-time high, but a high. So I'm just going to mute it so you guys don't have to deal with this. So now I'm set for a position and I'm most likely going to take a profit a little bit lower than here for a 3% scalp of a $50,000 position. So let's see how this rides. And I'll worry about it after finishing with you guys. So let's get back here for the drawdown. So if you take a look at the all-time high in November of 2013, what you'll notice is that we ended up drawing down about 82% is the low. And it took a while for it to come to the downside. And then if you take a look at 2017, the drawdown was 84%. It's somewhere in here, but actually 83%. And right now, where we're at is only 75%. So based off of history, it's definitely possible, comparing it to the previous 2 bear markets, that we have another 10% drop to go. More interestingly, right here, if you notice that this is where we were at before. Actually, let me just reset the zoom. Okay, this is where we were at before. Right here. We stalled here for a while, and everybody thought it was the bottom. But what ends up happening is there was a massive capitulation after of about 10 to 15%. So that happened in 2015. And then if you take a look at 2019 or 2018, same thing happened. There's a stall, and then this ends up dropping one more. And this was this chart right here. Let me show you guys it. And that was a really good year, in my opinion. It was my favorite bear market to trade. So we're talking about this one right here. Hold on. Got to go back. This one right here, where everybody thought it could have been the bottom. And then we made one last capitulation. So now, based off of these two charts that I've shown you, where there's a stall and then another 10% drop, is it likely that it could happen again? Maybe, maybe not. It doesn't have to happen, but there's definitely a possibility of it happening. And it could happen sometime between now, in my opinion, and also April, just based off of history and everything we've seen so far. Now, let me show you another really interesting chart. This is the return on investment chart. And this one here shows you if you were to buy it at the beginning of the year, how much would you have for an ROI at the end of the year? Okay, so you just buy it at the beginning of the year, your ROI would be 1. If your ROI multiplied by 5, it would now be 5. This is how this chart is measured. So take a look here. What do you notice about the bull markets that I showed you? Here, this is the 2013 bull market, 2017 bull market, and 2021 bull market. What do you guys notice about the ROI? I'll give you like a few seconds to think about that. Okay, what you might have noticed is that it gets lower and lower as the years go by. 2013's ROI was high, 2017 less, 2021 even less. And the reason for that is because, well, it was easy for Bitcoin to like multiply by gigantic factor when the market cap was much lower and it was at a lower price in general. When Bitcoin is at, for example, $100,000, it's probably going to be really hard for Bitcoin to, multiply it by 2. It's more difficult than, for example, if it was at 10,000 to 20. So the ROI diminishes every single year that we hit a bull market. What this means is it might be your very last opportunity to turn something small into something really big. This 2024 year or 2025, whenever this bull market comes, it might very well be the last opportunity that you ever have to turn something small into millions. That's my opinion because of the diminishing returns that we're seeing. And especially after regulations as well, we're probably not going to see as much volatility in the markets. So it's really important to study right now. You don't study during the bull market. No, you study during the bull market, you're already screwed because you're going to be dividing your time between studying and trading. You got to keep practicing for the Olympic event, man. You don't practice at the Olympic event. You know what I mean? You got to train really hard leading up to what you need to do, leading up to a fight for boxing or UFC or whatever. You have to make sure you're training now, that you're developing really good habits so you can be successful in this next bull market that's coming. And I'm releasing a course. Oh, this was a great segue, by the way. I'm releasing a course called I didn't even think of it, just so you know. It was just coincidence, called the Ultimate Bull Market Strategy Guide. It's going to be out in 1 month. It's going to be super affordable and everyone's going to pick it up. It's going to go over my exact strategies that I use for the bull market and the patterns that I'll be playing and exactly what I'll be looking for and what I'm going to do. 2017, I did all right. 2021, I killed it, made over 7 figures. But this year is going to be like, I'm hoping for an 8-figure year after all investments and day trading and swings longer term. So it's going to be my year, and I really hope some of you decide to learn some of my strategies because it can only benefit you. So now let's compare some other years as well. Let's compare the year after. Let's go over here. In 2013, if you put in $1, that $1 would have turned into $80. So if you put in 100, that would have turned into $89,000 or something like that. No, $100 would have turned into, hold on, what's the math here? $1 to 80. So $10 to 890. $100 would have turned into 8,900. That's the math. So then in 2017, your $1 would have turned to 58. Your $100 would have turned to 5,800. So, but in 2021, the maximum you could have made was actually only a multiplying factor of about 2.3. So it wasn't really that much that you could have made, but it keeps diminishing every year. Now, another interesting one is looking at the bear market afterwards, 2014, 2018, and also 2022. So these are the bear markets. And what we'll notice is that this year right now, we've dropped about 73%. In 2014, we've dropped more. In 2014, we dropped about 60%. Hold on, is this right? I'm doing the math wrong. Sorry, 2014 dropped the least at 60%. This year, we dropped the middle at about 65%. And then in 2018, we dropped the most at 73%. So right now, we're about the average of the last two bear markets. Another interesting one is taking a look at what happens after the year of the bear market. So if we look at 2022 and 2015, 2019, and this year so far, what we'll notice is that zooming in closer, we noticed that in 2015, there was that stall that I was talking about, and then it ends up dropping. Okay, it drops just like that. And then if you take a look at 2019, same thing. There's a stall, and then it drops even more. Okay, and then if you notice that 2019, it starts to rally. But if I put in 2020 here, okay, it starts to rally into the 2020 year. But right after that, it actually drops 50%. Right? So it doesn't matter what we've seen. We've seen everything drop so far. So if you take a look at 2015, we notice that after that last drop and we hit the bottom, which usually takes about 400 days after the all-time highs, we end up getting a accumulation period of about 250 days. And then the bull market doesn't start for literally 8-9 months. That's how the market cycle works. And the exact same thing happened as well in 2019, where we thought we were going to break out, but it rallied a little bit, consolidated, had a 50% drop, and then we consolidated for 250 days roughly as well, just like in 2015. So based on these charts right now that I'm showing you, it's not really possible for Bitcoin, in my opinion, to start a major bull market this year. And the people that are very bullish and fanboys of the moon, that just because they see a coin like Gala and Sol spike up, maybe those coins are at the bottom, maybe they are. We don't know that. But what I do know is that Bitcoin is far more likely to be at a bottom than likely to be like here already. You know what I mean? So I think the chances of us being at the bottom is probably like 30%. I'm pretty bearish right now. I'm probably like 70-80% leaning towards bearish. And that's why I got rid of 80% of the portfolio, which was valued over 7 figures. Because I'm just that bearish right now. And I'd rather protect my long-term portfolio than hope that we're going to start rallying this year when all the data is going against me. I cannot, in good conscience, hold a big portfolio right now when I believe firmly that we're bearish based off of all the data and statistics that I see in front of me. So this is what I wanted to convey to you guys. It's been a long video already. Yeah, there's so many cool things on here on Into the Cryptoverse. You don't need it. It's kind of pointless to have unless you want to show other people, or you know what I mean? Like you look at it one time and you get the idea of it. So it's not worth paying $120 for a month. But for me, it's important because I want to show you guys how it looks. And then there's so many different charts here as well. Like there's the fair market value. So the fair market value, it just shows you the fair market value, the agreed price that buyers and sellers would be willing to pay. And what we notice on the fair market value is that it generally stays below the fair market value a lot longer than it stays above it. And right now we're heavily below it, but it doesn't mean that it's a good time to start buying. If you take a look here, we generally just stay below there for a long time before we end up crossing back above there. And then now, if you take a look at, for example, the dominance, right? The BTC dominance, we can see that we're getting a little bit lower and lower always. We're just staying. So during the bull markets, BTC dominance tends to really go up. If you see here in 17. Oh, I don't think we have 2013's data. No, we don't. So right here, right here in 2017, BTC dominance just spiked up, huge. 2021, right, leading up to it, it spiked up really huge, but it started to lower. It started to spike up right there during the bull market. So right now we're at a really low point, and the BTC dominance can easily go as low as around here, around 33%. So this is another interesting chart to see how it's very easy to dip to much lower BTC dominance. And then there's a total crypto market cap trend line with another regression band. What we see is it's likely for us to hover down to over here and stay there for a while. But generally speaking, based off the total market cap, we stay below there for a long time of this regression band. So there's a lot of data that's just pointing towards a really neutral type year. But I do believe that we're going to be more bullish by the end of this year. We're going to be higher price than we are right now based off of the data that I'm showing you. So this is kind of all I wanted to show you guys today. I'm trading Gala today. I think it's going to be a pretty hot coin. I entered in the middle of a trade, or the middle of a trade during this video. Might have not been the best choice, but hey, it broke a major pattern. 1, 2, 3 points. 1, 2, 3, 4. I like to play symmetric triangles. There's a small accumulation now, and I think it's going to drop. So had to trade it. Avoid coins like LDO, guys. Avoid coins like LDO completely. I really mean it. And the reason is this, because this happened in the 5-minute candle. And the reasons you want to avoid it is because you are not in control of your money there. You are getting screwed over by the whale that's trading this coin. If you ever see a 1-minute candle that has spiked up 50%, you stay away from it. And the reason for that is because it's heavily manipulated by one person. This guy will, like, just think of it like this, okay? Think of it like this for a moment, where there's the price right here, okay? And then the guy, he market executes a buy. He's buying like $100 million, right? And then all of a sudden, like where he would originally buy it, the final price is up there. He buys it, right, for whatever people are asking, and then all of a sudden the bids just spike up. So now all of a sudden the price is up here, okay? But everything below, it just got eaten up. It got gobbled up entirely. But now, because it got gobbled up, it's filling up slowly to catch up to the top, right? So to where the bid meets the ask. But the same minute, what the guy does is he dumps it on everybody after it fills up. So the only person who actually wins is the guy that just bought up a lot. And you can see it reflected right here. You can see it reflected in the 1-minute candle, how he buys everything up. Then the price eventually starts moving upwards. It moves upwards, and then he just smashes it on everybody. So when you see a coin like that, even though it's really tempting to trade it, and you're like, fear of missing out, and the greed kicks in, and you want to make money, when you become a professional trader, the mindset is, man, I can lose a lot more than I can make. So it's better to avoid those kinds of coins. Start thinking about how much you can lose. It's good to go over your layers of risk management. Okay, that's how I see risk management. It's a way of having different layers to protect yourself from losing a lot of money. So for example, I'm from Canada. You got to wear like a t-shirt, then like a sweater, then a jacket, then like a winter jacket. So, and you got to have all these different layers of protection to keep yourself warm. So one way of having protection, for example, is limiting how much money you have on an exchange. You don't want to put your whole bankroll in your exchange, right? Because why would you play 100% of your net worth? Doesn't make sense. Second thing you could do to limit yourself is limit how much of that bankroll you play on the exchange. If you got $1,000, try to play with only $500. Say to yourself, for 3 months in a row, I'm going to play with only $500 no matter what. You can choose 3 different ways for position sizing. You can choose a fixed amount, like say $500 of 1,000, or you can choose a percentage of your amount that you have. So as it grows, you're proportionally growing your position size as well. Or you can choose a variable position size. And what that does is, as it depends on the volatility. So if you're trading a very volatile coin, you might want to reduce your position size because you could get wrecked more. But if there's a trade where you're very confident, there's a lot of confluent reasons, what you want to do is increase your position size. So it can vary depending on volatility, depending on your confidence and the probability of the trade. So that's another layer. That's your second layer of protection for risk management. A third layer is how much you would stop yourself at, right? Stop yourself out at 1 to 3% maximum. Now, can you imagine? And then so imagine if you don't stop yourself out. Obviously, it can turn catastrophic, right? So being sure that you only play, for example, 1 to 2 to 3% of whatever position size you're playing, that's a third way of having a layer of protection. A fourth way would be limit the amount of leverage, right? So if you're going to keep leveraging to the maximum every time, things can get bad. Now, imagine for a moment that you don't give a shit about these layers of protection and you're a newer trader, which is like 95% of everybody. So first of all, you put all your money that you have in real life onto your Binance account. Secondly, you play your entire bankroll every single time and you don't care about position sizing. Okay. Thirdly, you leverage incredibly high every single trade. And then fourthly, you never stop yourself out when trades are bad. What do you think is going to happen? You're just going to get destroyed in the market. So this is why having layers of protection is important. A fifth layer would be to know exactly what kind of coins you want to trade and not trade. So LDO is a coin that you don't want to touch. So I've got this criteria for entering trades. For example, I'm up $700 I made $700 right now, like choosing a coin in the middle of this trade or video of live stream, just because I'm careful about the coins that I'm trading. I'm not one of those guys, or you shouldn't be either, one of those people that's trying to snipe the top of a coin and be like, yep, where's the top? I got it. I got the freaking top, man. No, you don't want to do that. You want to wait for volatility to change, and then you want to make a decision. For example, right here, if you notice that the chandelier exits, it's been rallying for 111%. That's how long it was bullish for. And here, all of a sudden, it's finding resistance and the volatility changes. So I'm entering it based on so many different conditions. And this is why it's really important for you to develop these conditions and the ways to mitigate your risk. Because if you're going to keep losing money, how the fuck could you grow it, right? So who cares about the strategies, man? Stop trying to learn the best strategies to trade. That doesn't matter, because it's so easy to develop a strategy, in my opinion. But it's more difficult to develop a risk management strategy to protect yourself, because nobody cares about risk management. Everybody just tries to go for the profit. But a smart trader, I'm telling you, they're going to use their head and realize that I got to come up with ways to stop myself from taking massive losses. Because you probably win, right? A lot. And if winning a lot is easy to do, in my opinion, but having a strategy to protect that money from letting it go poof into the air, that's the hardest part to do. So I'm going to leave you guys with my little speech here, and that's it. I'm just going to take a look at some of the questions that you guys have. Hello, Bruak. Yeah, okay, well, there's not really a lot of questions other than how's the weather in Turkey. It's going pretty good. The weather is pretty good in Turkey. But I wouldn't know how the weather is because I don't go outside. I just sit in my room all day, and that's kind of it. So anyways, thank you for joining me very much today. This was actually the second live stream, and you guys matter so much that I made a live stream without you. I was literally talking to just the microphone, not recording. Nobody was watching for 40 minutes earlier. But now I'm sure that you guys appreciate me doing it again. So thank you very much for joining me. Have yourselves a great Tuesday, and we'll